I have $50,000 in gold sitting in my safe right now. And a portion of it is losing money. Not because gold crashed. Not because I got scammed. Because I bought a pretty coin. Let me show you exactly what that cost me. I bought a Chinese panda for $2,400. Same day, same shop, I bought an American eagle. 2 years later, gold was higher. The panda? Down $350. The eagle? Up $400. Same metal. Same weight. Same market. A $750 swing. Just because of the coin I chose. That mistake is still sitting in my safe. And today I'm going to show you exactly why it happened, the rule I built after it, and my real $50,000 portfolio, including the coins that are still bleeding. Because in gold, the coin matters more than the metal. Here's what almost nobody explains clearly. When you buy a gold coin, you're not just buying gold. You're buying a permission slip to own that gold. And some permission slips are expensive. With gold around $2,200 an ounce, an American eagle costs about $2,330. That's a 6% premium. A Chinese panda? Around $2,470. That's 12%. You are paying double the markup. For the exact same gold underneath. Why? Because it's limited. Because it's collectible. Because it's pretty. And here's where it actually hurts. Premiums shrink when you sell. You pay 12% to get in. You're lucky to get 8% back out. You just lost 4% before gold even moves a dollar. The eagle? You pay 6%. You sell near 6%. The permission slip holds its value. That's the entire game. And most people never learn it until they've already lost. Now let me show you what liquidity actually feels like in practice. If I walk into almost any coin shop in America with 50 American eagles, they write me a check in minutes. No negotiation. No phone calls. Because eagles are cash. Now try selling 50 limited edition pandas. You're making calls. You're negotiating spreads. You're hoping someone even wants them at all. I know because I spent 3 weeks trying to move 2 pandas at a fair price. 3 weeks of calls, lowball offers, and dealers who shrugged. For 2 coins. Limited does not mean valuable. Limited means fewer buyers. And fewer buyers means wider spreads. Boring is not a downside. Boring is liquidity. Here's a test that will teach you more than any article ever will. Buy 1 American eagle. Hold it for a week. Then call a dealer and ask, "What will you pay me for this right now?" When you hear how close that number is to what you paid, you will immediately understand the difference between investing and collecting. Liquidity is measurable. Feelings are expensive. Now let me show you my real stack. About $50,000. And I'm not going to hide the ugly parts. The boring stuff first. American eagles, $25,000. Canadian maples, $10,000. Up modestly. Nothing exciting. But stable. Then there's what I call the education bucket. 2024 panda, down $290. 2023 kangaroo, down $240. Mexican libertad, down $180. Gold went up. And I still lost $710 across those 3 coins. If that money had been sitting in eagles instead, I'd be up about $600. That's a $1,310 swing. Because I wanted something that looked cool. That's my stupidity tax. I'm showing you this because most gold channels only show you the wins. I'm showing you the losses because that's where the real education is. After that $1,310 swing, I didn't just change what I bought. I built a rule I couldn't break. Not a preference. Not a vibe. A rule. I call it the 70-20-10 liquidity shield. 70% goes into what I call the unstoppables. American eagles. Canadian maples. These are the cash of the gold world. Tight spreads. Instant recognition. You can move them tomorrow if you need to. If everything goes wrong and I need money fast, these go first. 20% goes into the globalists. British sovereigns, trusted for over 200 years and recognized in virtually every country on earth. Austrian Philharmonics, the most traded gold coin in Europe, with some of the tightest spreads in the world. Slight diversification without sacrificing liquidity. 10% is the education bucket. This is where curiosity lives. Want a panda? A libertad? A kangaroo? Fine. Put it here. But never cross 10%. Because the moment you do, you've stopped investing. You've started collecting. And collectors pay for emotion. Investors get paid for utility. Gold is not meant to make you rich. It's meant to keep you from becoming poor. Pretty coins sell you the feeling of wealth. Boring coins actually protect it. Every dollar you spend on premium is a dollar that isn't working for you. Every point of spread you overpay on entry is a loss you carry before the market moves a single dollar. The most boring decision you ever make in precious metals will be the one you're most grateful for. The $750 mistake is still in my safe. I keep it there on purpose. Not because it might recover, but because every time I open that door I see it. And I remember what pretty cost me. Buy boring. Buy liquid. Buy the thing you can sell tomorrow at a fair price. I'll see you in the safe.